INOX India IPO has opened for subscription today and will close on December 18. The company is the largest supplier of cryogenic equipment in India by revenue. Has been in the business for over 30 years. Now, what are cryogenic equipments? Equipments designed to handle extremely low temperatures, that is temperatures typically below 150 degrees Celsius. These can be used for various applications like LNG processing, liquefied natural gas processing, medical cryogenics, scientific research, etc. The company INOX India specializes in a wide range of products and caters to different industries like LNG energy, medical, aerospace, green hydrogen, etc. They have over 1200 plus domestic clients and 250 plus international clients. It has a very long partnership with ISRO and has been a part of many of ISRO's projects. It enjoys an excellent track record of performance and the market share in India is high. But in the international markets, the company has not been able to achieve such a market share yet. So with this IPO, the aim is also to gain visibility across the globe. The company has been consistently profitable and has a healthy CAGR of around 25%. 6 months ending September 30th, 2023, the total income was recorded at 580 crores, out of which the net profit was 103 crores, which means a good net profit margin of 17%. The company values at a PE of around 40 times with the market cap of 5990 crores. Now, the issue is completely an offer for sale. No fresh issue, which means all the proceeds are going to go to the promoters who are the selling shareholders. Why does a company go for an OFS? There could be many reasons. Booking profits and exiting the company, need for funds to finance the new ventures of the company, or the promoters just wishing to exit based on any of their reasons, or increasing retail investments as per the SEBI guidelines. Now, this is a promoter held company and promoters are diluting their holdings in the company. In an OFS, there is no impact on the share capital of the company. It's just a transfer of shares from the promoter shareholders to the other shareholders. There is no increase in the share capital as it is in the case of a fresh issue. So it's just an easy way for the promoters to dilute their holdings in the company to increase public or retail participation. Now, this is definitely one of a kind company of an industry which is expecting to grow at a 6.9% CAGR and the projected value is $16.6 billion by 2028. Therefore, the growth prospects of this company looks very promising. The company is a true testimony to the Make in India slogan, as it is an Indian company which is indigenously capable of making world-class infrastructure in this space.